Everyone's excited for this one. Let's give them a round of applause, guys. Come on, let's get some energy in the room. I know it's been a long day. Let's go.
Thank you so much for being here. Real-world asset tokenization and the concept of it being the next gold rush is what we're going to talk about today. The most important thing is that I will moderate this session, but I'm not an expert in that space. I think the people sitting here next to me are the experts. We're going to keep it very conversational, so we're not going to spend too much time about making it formal. I'll throw in some numbers and statistics, and then we'll see how it builds. So let's give some perspective on real-world asset tokenization. So as everybody's here is very familiar, there are many good things about tokenization: democratization, participation of economies that never got to participate in assets, perhaps speed of execution, perhaps a bit more transparency, etc. But we, I would say, have not even scratched the surface. And in all my kind of work that I do, I kind of look at perspectives, and let me give you some perspective. If all the real-world assets in this world were aggregated and they were the size of Burj Khalifa, guess how much today the traction of real-world asset tokenization is?
A parking spot?
9 centimeters.
Right.
Right? So just to give you a perspective, Burj Khalifa is 800 and odd meters tall, and if you take the aggregate amount of tokenization happening for real-world assets, you've just climbed 9 centimeters. So you have a long way to go. And this is why we are so bullish, and many people are bullish about it. So let me pass on to you next to me, Jay.
Dennis,
Vignesh, and Sakar to do a quick introduction, and then we'll open up with a debatable question, and then we'll go from there. So please, go ahead, Jay.
Sounds good. Thanks for that. I am Jay, co-founder of Mantra. A lot of you might have heard about Mantra in the past few weeks. Just want to say that it's still in the first 9 centimeters of our 800-meter journey. And we're here to talk about how tokenization and RWAs are coming on board. And looking forward to this conversation here.
Hey, I'm Dennis, Chief Blockchain Architect at Lumia. We're a ZK EVM Layer 2 rollup. We focus on bringing on-chain commodities and real estate specifically.
Hi, this is Vignesh here. I head the business for the HBAR Foundation. I'm part of the Hedera network. So my role is to head the tokenization space to bring the assets on-chain. Yeah, pleasure being here.
Hey everyone, my name is Slekar Erikat. It's an absolute honor to be standing here in front of you to talk to you something about something that's very close to my heart in such an amazing venue. But I think, you know, what we often forget in these conferences is how much effort and time goes into planning it for people that aren't sitting here on stage. So to the entire organizing team, maybe we can give them a big round of applause. You guys have done absolutely amazing, wherever you are. I can see a camera over there, so yeah.
Thank you, Sakar, and thank you, all of you. Look, let's start with a very simple question. Any new technology that goes and takes shape requires traction, and traction sometimes has a lot to do with tradition, culture, and regulations. And why do I bring tradition and culture into it? Because as humans, we are used to doing some things for years, and once we get used to it, change is very difficult. But the one thing I will share with you is that technology ultimately always wins, because technology changes things very rapidly, and it provides utility for people to do things better and faster. So while there is a little bit of hiccuping along the way, ultimately there is a win that happens over a period of time. And so the question to the panel is, and perhaps maybe Dennis, you can take this one, is tokenization not gaining speed because of regulatory frameworks or because of something else? What's your view on that?
So tokenization is still in its early days. We're seeing the first set of applications coming on chain through centralized TradFi people, actually, like Franklin Templeton, BlackRock, etc. They already started tokenizing money market funds. But to go beyond that, we need more traction. And one of the reasons why I think it's kind of slower than it should be is, one, is the legal clarity. There isn't much legal clarity. It's kind of a gray area, especially for assets that are high friction and highly liquid, like real estate, commodities, etc. So now that we're getting some clarity, I think we're going to start seeing a lot more products and assets on chain. And then the second thing is explaining to these asset owners the potential and advantages of bringing it on chain. It always comes down to two things, which is profit and trust. If you could explain to these institutions that you can cut a lot of costs and still have what you want, and if you could give them the trust that they need through data availability, oracles, and making sure everything's transparent end to end, we have a higher chance of bringing them on board. And then the last piece of the puzzle, in my opinion, is integration into the DeFi itself. So what happens when an asset comes on chain? Right now, not much. It just sits in your wallet. But if we could integrate that into DeFi and you could start borrowing against them, you could trade them as a collateral, then there is utility, there's use cases, and it becomes the future of finance, truly.
Yeah. So Jay, let's follow up on that. I think that's a very good point you made about the fact that it's all about the blockchain, it's all about embedding, it's all about making sure that the provenance is there, etc. But what happens off-chain? How do you know that my on-chain engagement is actually connected to something off-chain? Because real-world assets are off-chain; they're not on-chain, right?
Correct.
So how do we provide that regulatory clarity to people so that there are not, quote-unquote, scammers out there who claim that you are owning a particular asset and you own nothing?
That's true, because if we look at value itself, right? When we're talking about real-world assets and tokenized assets, philosophical question is, where does the value lie? Does the value lie in the asset in the physical world, or does the value lie in a representation of the asset in a digital world? Now, with blockchains, we're able to merge these two things together. So essentially what needs to happen is that currently there are regulated, trusted, centralized systems that people around the world believe in, which is your regulatory authorities. And then a blockchain is a trustless system. So until a trusted, centralized, regulated body starts putting the trust into a trustless system, which can also be verified in the real world, it doesn't necessarily do anything, because essentially what could happen is that the real world asset somewhere in the physical world is doing whatever it's doing, and then you have the transfer of value on a blockchain that is completely dislocated from what's going on. So essentially what needs to happen is, and I like to refer to this as almost like 2FA for your business, in that you have a physical, we're not saying that you replace the exact physical structures that exist in the regulated world. It is you add an additional layer of trust on top of it, which allows for the economies of scale that blockchains provide. So we're not trying to say that the old way of doing it is incorrect. We're saying that it is an evolution of the way of doing things. And by doing that, you open it up to a globally transferable value mechanism, which is also verifiable and trusted in the real world. And that's where you have intermediaries such as custodians, banks, etc., that step in. So it isn't to replace them, it's to work with them.
Got it. And Sagar, you and I, we've been in this ecosystem for such a long time, and we debate about these things all the time. In fact, probably keeps both you and me up quite a bit, because given the fact that we've been here, many, well, now coming up to 2 decades, and we've seen Dubai evolve in fits and starts. What's your view on how we can accelerate it by having discussions with the right authorities to provide that quasi-centralized space for generating regulatory clarity? What's your view?
Great question, and thank you for that. And I think it's a very important question to ask ourselves. And one thing, to zoom out of just blockchain and technology and whatever, one thing that we don't do as technology people well is to talk the language of our counterpart, right? To that point, the panel is titled Real World Assets. If I'd ask 10 people in the room right now, what is a real world asset? Would I get 10 different answers or 11 different answers? So I want to start with calling out the stuff that we mean, right? When we said NFTs to the world, what is non-fungible? What is a token? And similarly, okay, we can all agree real estate is a real world asset. My question to you is, what isn't a real-world asset? So I want to call bullshit on the name, first of all, real-world assets, right? Because we're trying to build a new financial services industry, a new way to transact value. This is what blockchain allows us to do. We can transact value more efficiently, more safely, more securely, in a manner that is transparent and accessible to everyone that is included. And that is huge. This is what got me excited about this space 11 years ago. Not that Bitcoin will go to $100,000 or that we're going to tokenize all real-world assets. I believe in total fluidity of all markets into each other. This is what now with blockchain we can do. And we need to have these conversations in a language. The other thing is, if you're in this room right now, you are early. You're an outlier. If you're on this stage, you're a straight-up weirdo with respect to each and every one of us, right? Because we're following a trend that, if anything, is just about shaping. And we're trying to pioneer this trend. And probably all of you guys have been doing this for a couple of years. I can tell you I've been trying for 11 years. And when we just accept these basics again, then we can go back to our counterparts within government, because it is government that will need to step in and provide clarity to have the conversation the right way. So who do I mean in government? It's the regulators, the financial services regulators that are out there. It's the people that govern any interaction between one asset and the other. And what is really important, and I see that's where we, and I point to myself before anyone else, have failed as an industry, is to talk the language of these governments, is to talk the language of the old world, so to say, to bring them into the new world. Yeah. Am I still hopeful that it's going to happen? Yes, definitely. Yeah. Am I hopeful it's going to happen soon? I don't know.
Yeah. So Vignesh, Hedera, you're with. Let's talk a little bit about the fact that if the distance between technology and regulation is not compressed, what you do is you create speculative bubbles, right? Yeah. Because people think, well, this is my chance to get in, I'll get in, someday regulation is going to come in, they'll sort things out. Well, guess what? I'll be sitting on something, worth something. And in reality, regulators are always slow. It doesn't matter whether it's financial regulators or central banks, whether it's crypto regulations, etc. Are we in that space of, let's say, reviewing it from the perspective of the fact that distance is very large, and perhaps we are trying to create a speculative bubble? What's your view on that?
I think things have changed. It also depends on the jurisdiction where you are based.
Okay.
Right. Right now, started in 2014, 15, where we set up the Dubai Blockchain Council. That's when we were talking about RWA then. It involved tokenization of gold, tokenization of real estate. But things were not picking up because the regulatory clarity was not there. It was just starting up to set up the committees and stuff. But now we have all the regulators. I think they're pretty advanced. Especially, I can say from this region, I can have definitely say, especially we have VARA, Virtual Asset Registry Authority of Dubai. You have other institutions like ADGM. I think they have enough clarity now. And that's where I think companies are coming here. And we see a lot of traction, at least for the past couple of years.
Got it. And Jay, from your perspective, where do you think the concept of, let's say, audits sit in all this? Right, there has to be some sort of a policeman somewhere, right?
Absolutely.
Because that, I wouldn't say policeman, but some sort of a validation mechanism, which is more than just decentralized, because I think we all believe in decentralization and nodes and validation through that trustless mechanism. But the real world sometimes doesn't understand that, and so we need to bridge that. Where do you think that sits in this process, and does it even have a home? Maybe it doesn't, I don't know.
So I think one of the things that we need to understand, and this is both on one end of the spectrum, you have the regulators, on the other end of the spectrum, you have like the crypto pioneers that we have, right, that are pioneering the decentralized motion to go forward. And in between is that gap, like you mentioned, and Sakar was also talking about it. The one thing is that what happened with digitization of businesses is now the tokenization of businesses that's taking place, right? Meaning like we have these real-world business models that are being brought onto a blockchain. So then when people talk about tokenization, I think that we're looking at it from a very narrow lens of oh, there is value that exists, and then now it's represented on a blockchain, which means that the blockchain is the almighty source of truth. But it doesn't take into account that there is an entire business that exists that is physical and tangible and real in the real world that people are talking about. So from that perspective, it is, I wouldn't call it a policeman, but I would call it a way to have credible neutrality. Because if something were to go wrong, and we're talking about like the smartest of the smartest people that are probably in this room right now that are at the tip of the spear. But if we look at the population of about 8 billion people, a lot of them don't necessarily have the wherewithal or the capability to look out for themselves. So who's looking out for them, right? And that is where, going back to the point, that regulators need to take a slower approach because you're trying to bring an entire population onto this new platform. So again, I come back to not a policeman, but a credibly neutral source of truth, which is accessible in the real world and verifiable on a blockchain. And that, that handshake, let's call it that, between these two is what we're figuring out exactly where the sweet spot lies.
Yeah, Sakar, you are reaching
He's
out.
talking out of my heart
Tell
because
me.
it's very easy for us to forget, and we live in our little echo chamber, right? If you talk to another blockchain guy or crypto guy, he'll tell you the exact same things that is in your mind, and you find yourself validated by that. But I think it's really important to just every now and then zoom out, accept a couple of basics. First of all, we're super early. This entire technology, 10, 11, if you want to start at 2008, even then we're not even 20 years old. Two is hardly, I don't care about the exchange numbers, but when you actually look at numbers, hardly 1 to 2% of the global world's population is on this technology. And more importantly, the world is running with or without this technology. Right? So to Jay's point, he's talking straight out of my heart. It's very important to look at the big picture rather than just we're tokenizing this or we're tokenizing that.
Yeah, no, but look, from my perspective, there's also a good news. The good news is if you're super early, you're also a super shaper.
Right.
Right? You have the opportunity to shape the ecosystem. You have the opportunity, and of course, you know, you've done that in your previous life, but in many ways, you can also shape the dialogue. You can shape how things are discussed, and to be able to kind of allay the fear that a lot of regulators have or even the decision-making bodies have. Now, in that sense, Dubai has done an incredible job because we've been able to put regulations together, we've been able to attract crypto companies here, we've been able to weed out some of the bad actors, right? So all of these have happened. So any of you guys, like Vignesh and Dennis, what's your view on the ecosystem in general? Is it conducive? Is it a little bit still early? Where do you think it sits? So Vignesh, perhaps you can share with us a little bit.
I think from Hedera perspective, starting from 2018, I think we have seen it all. It started with, being just, we are as part of the foundation, our mandate is to give grants, right? So initially it was like startups building on us, day apps. We used to give grants for technology companies just to come and build on us. But now I think our perception has changed, our mandates have changed. So now we are more strict in what we do in terms of just not looking at a technology or licensing. We are focused on the quality of the assets on chain. So we look at, okay, I can tokenize anything, literally, but is that token worth anything, or is that asset value anything? So we look at the supply and demand side. So you need to have a demand. So I can tokenize a real estate, for example. If nobody is buying it, what's the point, right? So it should be liquidity, and also it should be secondary market. So you need to close the loop. So I tell all the startups, like, look, I have this, we need to build on Hedera. Fine, great. I always advise them, it's beyond that. You need to close the loop, supply, demand, everything has to be taken care. Otherwise, there's no point doing a token. This is my view.
I'd actually like to just add on a little bit over there. Everything can be tokenized, but not everything should be tokenized. And the other thing about, because we are so early, a lot of the people that are very early in this are the ones that are running through brick walls and getting their noses bloodied. I would know from the past few weeks that we've had in Patra. So it's just about how often are you able to get through these brick walls, work with the regulators, like Vignesh said, bring quality assets on chain, and allow people to have that composability. Because right now, just representing value on a blockchain isn't enough, because all you're doing is taking something that exists in the real world and saying, now here's it in a new database. But then a database is not enough. It's the transfer of value, and that's the unlock that blockchains provide.
Got it. What's your view, Jay?
Yeah,
Dennis.
From my perspective, so I'm an engineer. I deal with the code tech, the day-to-day. So when I think about tokenization, I think about from the user perspective. And the more we simplify the whole process, the more we add abstraction layers and make it seamless to be integrated with the existing systems, the higher chance that we're going to have a better tokenization ecosystem in general. So when we tokenize real estate, when we tokenize commodities, the next question that we should ask is, well, what happens post-tokenization? How do we utilize these? How do we bring liquidity and trading avenues to these? Otherwise, it's kind of pointless, right? It's just sitting in your wallet. So I think we need to focus on the next part of tokenization, but remember that the average user does not care about wallets, transaction fees, gases. These should be all abstract. It should be as simple as opening your Outlook mail client. The same analogies should be applicable to tokenization.
But it's incredible that you bring a technological layer to it, right? Which I think it's fascinating because I tell you, if you kind of look at crypto in general, I mean, we've gone through crypto winters, et cetera, and every time there's a winter, it almost feels like you're taking 2 steps back, and there's a reset, and then you start again. But I'm a technologist. Technology doesn't change, right? It's human nature that steps back. It's not technology, right? The build has already happened. It's our human nature that steps us back and says, okay, let's rethink, what is it, right? And where are we, right? And what should we do? So Sakar, on that note, I mean, look, you've had an evolution of your life through technology, and you've talked to normal punters about tech. Because I think one of the things I realize about you and like is that you are able to speak to the common man, right? Is that what is needed?
Definitely. And this isn't Slekker's point of view. Forget about my point of view. Who am I? When you look at the majority of there's good studies out there, and they'll tell you why do IT projects fail. Again, away from blockchain, away from AI, away from emerging tech. Why do IT projects fail? The biggest reason why IT projects fail is not because of technology, it's not because of requirements, not because of... The biggest reason why IT projects fail is simply change management, human nature. Because in the end, when you wake up in the morning and you check your phone, all you care about is, did I receive a message, did I not receive a message? You don't care if you're using HTTPS or TCP/IP or the blockchain or Starlink or Itisalat or whoever. A normal person cares about that they can do their job with the technology at hand. And we are all human beings, and as a human beings, we don't like change. It's very simple, which is why there's an entire profession out there called change management. And let's be real. We've not done change management well when it comes to blockchain and crypto.
Well, look, I accept that, but you know, in consulting and in many things that we do, there's this 80-20 rule, right? You know, 80% of the work happens, you know, in a small amount of space, etc. I mean, the problem with crypto has always been it's like the 98-2 rule, where 98 is scam and 2% is real stuff, right? And so when you're working in that world, it always becomes very tricky because technologists continue to build, because you guys are builders, that's what you do, right? Psychology hits against us because we go, oh my God, I got scammed, you know, my crypto got lost, or you know, my wallet got stolen. And then the change management becomes even more complex because, you know, people say, well, maybe it's too early. Maybe, you know, once bitten, twice shy kind of a thing. So, but any one of you have any comments on that? How do we modulate psychology and technology in sync? Let's call it that way.
I think change management is a bit... So the thing is, the technology, the sector that we're in, Web3, is still nascent. So it's still being developed, and we're still talking about scalability, TPSs, mega gas, gigas, whatever it is that we're talking about. So because we're still building the infrastructure, we haven't even got to the stage where we can manage retail change management. So we can't even hit that point yet. So I think our systems have to scale up, integrate with the existing systems. Then we start talking about, well, how do we manage people's expectations and how do we get them to change their ways? Right now, we're kind of deep in the trenches still, and it's still going to take a bit of time.
I would agree with you if it was 2017. I'd be with you 100%. No, 100%. You'd be 100% right. We're in 2025. Applications have been built. The DTCC is transacting on a daily basis in trillions of dollars. Carrefour over here. Show of hands, who's here in the UAE? Who's from the UAE? As in, lives here or interacts here. In Carrefour, in the local supermarket, I could scan my chicken, yeah? Find out when it was slaughtered, where it was processed, and actually get the name of the farmer. And, well, they haven't rolled it out, but I could have theoretically, in the next version of it, if someone would have adopted it, tipped the guy who, processed my chicken, right? Another example, right? You can today track your bill of lading on blockchain. The technology is tried and tested. IBM and Maersk invested hundreds of millions of dollars, for all I can tell, only for it to fail. So I'm with you. We are nascent. But also, we've seen use cases where I, 5 years ago, was standing on stage saying 2 years from now, this will be the standard. And why wasn't it adopted?
So I think I can, I'm going to weigh in with my opinion on why it isn't the standard. Because the technology exists today that tomorrow morning we can have 8 billion people on a blockchain. But I think the two things that have been holding us back is, one, as an industry, we thrive on being condescending towards one another.
Yes.
I'm smarter than you, which is why you don't know what I'm talking about.
That's true. Yes.
You need to become smarter, do your own research. That's just the ethos that we have as an industry. And the second part is that because of that ethos, we never have bothered to educate the people about why decentralization is important, why owning your value is important, why your keys are important. And one of the things is that anyone that wanted to be their own bank is already here. And so the 10 million people that wanted to be their own bank are selling more things to the 10 million people that want to continue to be their own bank. We don't care about the people and what we're actually solving for. So TPS, gas fees, etc., it doesn't matter.
Right.
How are you making my life simpler? What are you doing to make my life easier? I think these are some of the fundamental questions we haven't answered as an industry, because we're still working on how do we take businesses and bring them on chain and actually make them more efficient. So until we have that, and that's a longer conversation that comes in. So if we're talking about human education and change management happens at a glacial pace. So we can't force it to happen at crypto narrative speeds. So that's where I at least find that we need to work forward.
Very fair point.
Yeah. Well, look, if I were to kind of look back and kind of look at it from context perspective, I'm looking at a technologist, perhaps a businessman.
I identify as a technologist.
I don't know, right? But at
the
least
first thing I did
I'm
is
not
code.
I'm not a technologist. I mean, I don't build, I don't code, right? So the question is very simply, if you look at the gold rush that we talk about, right? We talk about the gold rush, California gold rush. In the California gold rush, nobody found any gold. But the people who made the money were the guys who sold the picks and shovels. And the question is, are you guys the next picks and shovel guys? That you'll do fine, but the reality is that the traction will take so long that 2049 may come and go, and we'll still be talking about tokenization. What's your views?
Pick and shovel guy.
So
Good.
just going on to the analogy that you have, the gold rush, nobody really found any gold, but that founded the basis for California, which has been the technology capital of the world. So I don't know exactly whether the picks and shovels are going to be the ones that help out, but there is going to be something that happens over here with the changes that are coming about. Yeah. So I don't know what that change is, but I can tell you it's happening at a compounding rate.
Yeah.
So I don't know what the future looks like, but I can tell you that it's in this direction.
Amazing, amazing. Look, let's start with you, Sakar. I think we're running out of time. So just some parting words
I
from
said
you
enough.
all the way
I'll
here.
pass it to my fellow panelists. Vignesh.
Yeah, I think from our side, I think RWA is here to stay. And with the frenzy happening around meme coins and all that stuff, we see a lot of traction, especially being a US-based company. We see a lot of support from the new incoming government. So I think we are very positive about this. And my advice for any builders is to close the loop, as I said before, just to make sure that whatever you tokenize is of value, and it makes sense, and you have the demand side also be ready. That's what we're looking at.
Dennis?
Yeah, I think RWAs are going to become the future of finance, genuinely. First, blockchains will mimic what's out there already, and then eventually it will become the source of truth as we become more software-driven and AI-driven world in general. So RWAs are the true future of finance for the little guys to profit and actually be part of the financial system.
Got it. Jay, any parting thoughts?
Just that tokenization is happening today the way digitization happened 20 years ago. There was fear, uncertainty, and doubt about how businesses would change then. And then that mindset of humanity just continues. So there's fear, uncertainty, and doubt. But it is inevitable.
Got it. Well,
I'm
thank you so
positive.
much for your time. Yeah, sorry.
Yeah,
Sakar.
just one last point. I'm positive. I think we're in our 1996 moment of the internet.
Yeah.
I think it's 1996 and blockchain is the internet.
Yeah, yeah. Well, we are all believers, and let's all accelerate that change. Thank you so much for your time.
Thank you.
Thanks so much.